Welcome to a new episode of the Impulse podcast brought to you by Anja Ventures. My name is Nils Wagner. Today, we're diving into the world of venture capital investing for real asset tech. These are technologies that are transforming the real estate, energy, and infrastructure sectors. Our guest today is Anja Rath. She's a managing partner of PT1 Ventures, one of the leading independent VC firms in this space. PT1 invests in Futurebuilders, startups that are from global megatrends such as research scarcity, climate change, and digitization. With a unique AI-powered deal flow, PT1 finds and nurtures promising startups long before they appear on the radar of other investors. There's a lot for us to talk about in today's episode, such as innovation changing the built world, success factors that are crucial for startups, and how corporate VCs or corporate venturing units like Anja Ventures can work with founders to promote sustainable solutions. Anja, welcome to the podcast.
Thank you, Nils. Thanks for having me.
Anja, do you want to give a bit of background on your career and ultimately what brought you to PT1 and with that the world of innovation in property and infrastructure?
Yeah, for sure. So actually, I'm in around venture capital for more than 20 years, always in different ways. I've done CVC structures. I've done a kind of a family office for the asset class venture capital, buy side, sell side transactions, support in fundraising, all that stuff. So all along, I've always been very fond on early stage investing. And back in 2018, actually, we decided to launch our first fund, which was an early stage fund. Back then, the first one was mainly focused on the built world, on the digitalization and decarbonization of the built world. The second fund now today is far broader. As you said, it is focusing on real asset transformation, covering the built world, infrastructure and energy mainly. And so that's how I made my way through it.
What brought you then to the built world? I mean, it is a rather specific domain in the early stage venture capital field.
Yeah. So actually, I was always attracted by the fact how technology and innovation might impact these giant asset classes. So the built world, real estate, that is defining our everyday life. That's something we need, as well as infrastructure. So that are the basics. And interesting wise, over the last decades, there has been little progress compared to other industries, actually. So for me, it was always super interesting to being able to back super great, sustainable new technologies that are able to change the system, how it works today, and to find stellar teams. And the interesting part about this full real asset area is they are such giant asset class, but if you look how super or hypersensitive they are to external changes or turbulences like political changes, environmental changes, macroeconomic changes, you see how sensitive they are actually. And for us, I say, if you look at the current situation, global situation, the lack of flexibility in all these industries is a problem for the full story of how resilient is Europe in general, how resilient is our infrastructure, how resilient is our built world. And for me, this is directly interconnected with flexibility, and flexibility comes along with innovations, new technologies. And that's why we thought for a second fund, this would be a perfect fit actually. And you see that also when you see some of the companies we invested in, or we see in the deal flow. These are such fundamental, good, groundbreaking technologies that will make such a difference if they are able to stay in the market and convince the industry. And that is for me, that's the main passion actually as an investor.
I mean, for me personally, the built world, has a kind of special place in my field of interest because I'm actually a architect by education.
Yes.
So I've always had an interest in the built world. Over the last few years, approaching the built world from the kind of venture space, from the early stage space, I've been dealing it with it from a different angle. The understanding that the built world is hugely important also when it comes to the global CO2 emissions, for example, but also when it comes to just overall productivity. There's a lot that would need to change. And at the same time, and I'm sure you have a lot to relate to here, it's actually relatively resistant to change. The built world is rather conservative. And I always say for good reasons, because, you're moving a lot of material from A to B. There's a lot at stake. It usually entails a huge investment. So, to rely on something that's tried and tested is a little bit in the nature of the built world. How do you reflect on that aspect? Because it's just not quite the same as when you look at a purely, let's say, software-driven tech space. It's just different. What are your thoughts there, and how have you dealt with that over the last years?
Totally true. Totally agree. We had the discussion so often because usually back then, like 4 years ago, when we started out in the build world back in 2018, everybody saw us coming like from the digital world, thought it's like kind of a quick win to digitalize the industry, but it wasn't technically. So the fact that you have two worlds and you have like an industry that worked for such a long way or such a long time in this way, and that was not that easy to adapt to new technologies, and for many reasons. It is not always like their fault because like they are resilient or whatever. No, it is just mainly the fact that if you have a new technology and if you have like something that changes existing or running system fundamentally, it has to create a real economic benefit to the user. And to be also totally fair, not any of the cases or of the products out there like really fit to that requirement. So it was always quite a useful discussion when you had back then, for instance, on ESG, like everybody was talking like ESG needs to be regulated and all this stuff. If you talk to the industry, and you know the best, like if you talk to the founders, if you talk to the real estate owner, most of them said like, yes, it is regulated, so I have to do it. But the only technologies that was really successful in the longer run were those technologies that created an economic benefit to the user. So where he said, like, it made absolutely sense for me financially to just use this new piece of technology to jump on this wagon or whatever. So that's what we recognized quite early on. So it was not that easy to transform the industry. And often also you had the situations that decision makers were super advanced and say, well, that makes sense to add this product or to optimize the processes. But it didn't work out if they didn't manage to get like the operational team on board. So, just making a decision to use a piece of technology, it can be good as it be, but if you don't have the backing on the operation side, it won't succeed. So that's the truth, and I think many of the startups, of the investors, of the industry had to go through these learning curves 4 years ago. And now it is basically understood what is the basic requirement you have to correspond to, you have to meet. What is something where you say, like, I am kind of an innovation leader. I want to try and test new ways to operate, to optimize, new technologies. And then you have this middle field who simply says, yes, if it makes sense for me financially, if I don't lose any money, if it has like a positive impact on my operations or my profile or my image or whatever you name it, that's their decision technically, then I will use it. So that's actually the way you operate in. And that is different basically to many other industry that had to transform, digitalize, or whatever you name it. So I think that is really specific to the build world. So that's why I agree with you. Yeah.
I think, top down versus bottom up has a different significance in the built world because bottom up really means that you still have many hands and many humans, which move things from A to B.
Yeah.
So really acceptance and adoption has a completely different meaning. And you need to actually make sure that whatever you're offering works on that direct human level, that people are happy to use your solution, that they feel comfortable, that they feel safe, etc. Talking about that, what are some of your favorite wins and some of your favorite fails? So like specific examples of, technology where you said, look, this was just great to see that this really worked out, this was adopted, and maybe the opposite where, you had high hopes that something would lie and it just didn't. I always think it's great to, put a bit of on the bone with some examples.
Yeah, for instance, just start with failure. So for me, like coming from the digital world, it was like super obvious that everything that reduces effort, smooths the process on an operational level is actually a win. So simply speaking. And we had a case that was actually kind of an e-procurement solution that was managing the process between the construction company or the real estate company and the trading part. So to fully digitalize the order process. And that was for me quite like a no-brainer. So technically I thought like must be like it's an obvious win. You are faster. You can compare different offers just by that. And it was quite easy to understand and also quite easy to introduce or implement in a structure. But what happened actually is that exactly what I said, the willingness to adopt was missing. So like it was easily sold to the clients, but then everybody recognized that the people are not really willing to use it because they used like for 20 years, like their phones, fax, whatever, because they've done it like for 20 years and they didn't see, for whatever reason, the value to adjust to these technology. And to be honest, like that's fair enough. So you cannot now try to blame someone, like whose fault is it, but it doesn't matter at the end of the day. It was not the perfect fit. Probably was the entry barrier too high on a usage level, or it didn't solve such a huge problem, you name it. So from a digital perspective and from a product perspective, it was actually a perfect product, but obviously not because the willingness to adopt was missing. And maybe it might have worked out in a different industry on a different level. We have seen comparable solutions for other industries that worked out, but in this specific case, it didn't work out. So that's one of the typical things. It was back in beginning 2019, probably today it would have been different, but back in 2019, it was exactly that situation. And the opposite example was an example from the retrofit world. When we invested in that, it was like really, so the main problem, if you look at the stock today, close to 60% of the existing build world or the existing buildings out there rate on the second level energy efficiency level. So really like a horrible situation. And for me personally, but that's my opinion, this full like trying to retrofit existing stock, use it, reuse it, also this part of the office world problem that is coming up now. This is a bigger part, a bigger challenge for us than the build part. So building new. Because building new has a lot more opportunities, you have a lot more opportunities and you have also a lot of companies involved in the industries that are innovation driven technically. But on the existing stock side, it is like something we have to act on, but really nobody is really willing to. And we invested in a company that's do retrofit for these typical buildings from the 1960s, not really good looking, like, these current ones. And they did it in like half of the time. That's the overall goal. Did it like in 50% of the time. And using prefab modules built on digital twins. And when we invested in that back then, a lot of people were saying like, are you sure this is going to work? I don't know. You need to keep it on scale. And I was super, super excited to see how this company developed, and they're doing an excellent job out there. Everybody's like really always referencing to them. They just won, I think, every prize that is available out there. So they are doing a good job. It's about execution. And for me, everything that happens in the built world in general, the main challenge is to be able to multiply quite fast. So serial retrofit, serial production, also do it like on a scale and not only just like one lighthouse project that's for me the key challenge. And that was one of the wins where I said, like, that's a really good development. And I'm super happy for the founders as well that they really stick to it,
You've
even if
made
the
everyone
environment was
curious. Yeah.
challenging.
Which company are you talking about?
As I say, it's EcoWorks.
EcoWorks. Okay. Yeah.
Yeah, yeah,
Fantastic.
yeah.
Yeah. Definitely
That
the
was a
place.
good example for that. And if you would have asked them like years ago,
Yeah.
many people would have thought,
Yeah. Yeah.
tricky
No, that's
one.
definitely a great example. But maybe just to double click on the failure part of it, because
Yeah,
look, this is something that we see a lot, and also in our own venture building activities, we kind of really learned the hard way. I mean, maybe two different aspects. One is if you have founders coming kind of from the tech space, that think in terms of disruption. Well, look, disruption in the built world is something no one wants, right? No one wants disruption. Disruption is catastrophe. So again, people are more depending on tried and tested approaches. And the other aspect is that the real hard difference between a problem and a pain point. I
yeah,
think that's where often one just isn't really consistent enough. And again, what might in other industries, a problem is maybe already a reason to come up with a solution because incremental improvement might be enough to warrant a new solution. But that's not enough in the built world. So, I think there is sometimes where founders just aren't persistent enough or have just way too many biases, that they come to the field with instead of really understanding and interacting with stakeholders to learn if it's only a problem or if it's a real pain point. So, I mean, what kind of advice do you give your founders? I mean, you guys approach the founders early on, and how do you see their thinking, and how maybe do you try to influence their thinking also going forward?
yeah. So what we're really looking at the meantime, that is specific to the industry, as you said, that if you look at the founder teams, that these are not just just part of like people that are digital natives or coming like from the digitalization of different industries. They know how to do it, no doubt about that. But you need someone in the team who understands the other side of the table, who really understands the build world, and not only one specific problem, but who really has the full understanding, the full picture of the industries, because it's not only about the product itself. If you look like a journey of a company, yes, they deal with the product 80%, 90% at the beginning, but later on, it is about identifying like really a good product market fit, trying to find the right clients, sometimes even pivoting, sometimes do whatever. So you need the full picture of the industry, and you need someone who has a background in this area. That is honestly, I give you an example. We had a really good case, I think 3 months ago. It was a deep flow. It was a super good topic. I turned it down actually because exactly of this problem. So it was a super team. They were really good, super convincing, no doubt. But I was missing the knowledge and I was missing the background from the industry. And I think this is, in our world, it is super crucial. It's the same if you invest in energy, for instance.
Yep.
Well, infrastructure, you know that best. So you need someone who understands, or you need a team who understands both worlds. If you don't have that, you can try to get someone in the team. But again, the truth is, and that's always, I say, the challenge in early stage venture capital, you like the full project is dependent most of the time on the founders. If you're late on in PE, no one cares. You have a balance sheet. Yeah, you get a new manager in or something doesn't work. You invest in a balance sheet, and that's like your main value. In early stage, you have a team, and if the team is not complete, if it's not working, if you don't know how they interact, what comes up, if times gets rough, times are not always easy. We know that. So this is for me like the key part I'm looking at, to be totally fair.
No, totally relate to that. I mean, it is congruent with our experiences. So obviously, yes, you need a certain skill set when it comes to tech and innovation more in general, let's say, but you definitely need that credible industry experience. You need people who can, speak the language of exactly, those people on site, which will need to be working with this solution on a day-to-day basis. And, an interesting example from the more traditional industry is Hilti. I'm sure you know. Whenever someone from Hilti with their, red jackets appears on a construction site, people get excited because they know that these professionals are, really deep in the real world requirements and, are really able to solve hard problems. And maybe that's just a good example of, an attitude and approach to aspire to.
Yeah.
We need to be that kind of, welcome partner on construction site, really speaking, on an eye-to-eye level.
Yeah, and I think also what is sometimes you should not forget about this economic and financial part, because not only like on a client side, but if you look, for instance, on the investor side of the fund. So if you're a fan of impact, if you're a fan of built world, if you're a fan of, and it doesn't matter, as long as the business model you invest in work for itself, stand alone, if they are a financially good, solid case, you don't have to believe in something. And I think that is super crucial. And that is something probably we've seen, say like 1 or 2 years ago, changing. But for me, that's the key point. I do not want to convince someone on the investor side on a specific topic. I always want to have like the cases stand alone, like be a value for itself and make the investor invest in it. And that's the same on the product level or on the product side for the portfolio companies, and we have that seen several times. We have sometimes investors in the portfolio company, so they're doing co-investment with us, that are not like really specifically super eager or hot on a specific topic, but they say it makes absolutely sense. So, I've seen the model in the long run, makes absolutely sense. Tick in the box, investment. So, and I think this is something we have to really focus on now in the industry, especially as times get rough. So you see if you look at the world, if you look at the political, macroeconomic situation, all this stuff, you need to make sure, like, what is the core of your investment? The core of your investment is you need to find models that work even if the environment around is changing to a certain extent. If there's a full collapse, there's a full collapse. Okay, yeah. I mean, look at the transaction part, like software or platforms dealing with transaction in real estate. Their product is not bad for some, but nonetheless, they're currently struggling. But that has nothing to do with the product itself, but they're sensitive to the environment around it. So we'll come back, but, and I think the key is like really trying to find out in these times model that works for itself.
So you're saying you don't want to convince investors ideologically to invest in the space. You're saying, look, we have basically cases, that in terms of their economics, in terms of their potential can, match with cases from other industries. Yeah. That's what you're saying.
Honestly, yes, because we have a lot, like if you look at the end of Fund 1 and beginning of Fund 2, we have a lot, for instance, also climate tech investments, but we never invested that for like only the purpose of wanting to do an impact investment.
Yeah.
It is something we're interested in that makes sense, that is doing something good, that is contributing something positive, but we only invest if we think it is a really valuable standalone business case for an investor, independent investor, who's probably not mainly driven by impact. Or if you look at the current discussion, it's all about defense, it's all about European resilience. If you look at our portfolio of Fund 2, these discussions about European resilience and defense came up like 2 months ago. Our portfolio covers all that spaces, not the defense part, but the resilience part, like already a year ago. So it is like you need to stay, and that's why we decided on a specific topic. That's why I don't know anything about, vegan diets or nutrition or something, I know something about like real assets, real estate, energy, infrastructure. That's where we always want to stick to, but it can have different flavors and it has to respond to different market trends. But still, it should not be too crazy just if there is a trend to jump from one to the other topic and change your profile 100% or something. That is something I'm not really convinced about, to be honest.
Okay, so you have a pretty consistent compass, let's say, that gives you direction. But maybe to challenge that, would you consider investing into something that has to do with the defense of, for example, energy infrastructure?
No, we wouldn't probably do that. What we do is, like, if you look at the second portfolio, just give you an example. We have companies in the energy storage area. We have infrastructure projects. It's like a drone surveillance technology, checking on infrastructure, on methane lakes. You can use it also for the construction side. You can also for all different types of control large critical infrastructure. So you can all cover that under the umbrella of European resilience. By that, that is something I still feel comfortable with. The full, like, now you sometimes hear now that impact funds talking about defense tech. So for me, it's all a bit like weird. I always try to do what is our profile, but respond to the market needs. And in this case, I think we probably had quite a good feeling a year ago that we started to build a portfolio that covers our main areas, but also responds exactly to the problem that Europe has to be a bit more resilient in the future, and that we have to focus a bit more on our own assets now and invest money in that. And so it's technically how I think, or how I believe you also create a profile people trust in, because they know that's what they get,
Yeah. No, and look, maybe let's take a bit of a step back. So besides, your clear, let's say, industry focus, what else, in your opinion, sets you apart from other VCs that you see or that you deal with, and maybe go into, how you handle or manage your deal flow? How does maybe AI today influence the way you work?
Yeah, we've done that actually. We built an own like database software. We have an AI-driven deal flows software platform. It's a tech stack we developed because it made sense for us. So probably not everybody knows, but venture capital is not always just like making decisions in 5 minutes. It's a huge analytical process. You need a lot of valuable, reliable data if you make decisions, especially early on, because, as I said, later on, you invest in a balance sheet and that makes a difference. But if we invest early on, we really need to understand the market. We really understand the competitive environment, what the industry wants. So we decided to develop kind of our own tech stack that makes sense for us, that helps us to facilitate this process and to generate valuable data on a large scale early on. So it is our own platform, and we learned a lot about that, because sometimes you have investors asking for, are there any specific trends out there in a specific area or something, or even in the portfolio companies are asking, like, how does the market look like in this area regionally or whatever. We are able to generate these data straight away, and we are working with a lot of data, and we have to precede a lot of data. So that's why for us it was really important to invest in our own tech and invest in this process, make it as reliable as possible, actually, and to be always responsive if someone has a question on why we did this investment or why we didn't do the other investment. We are always able to answer that with a solid fundamental data. So, and I think that is really important, especially in this early stage.
Okay, so in terms of maybe managing your deal flow and facilitating investment decisions, I get that part. But what about for your portfolio companies? Is there a way that you continue to collaborate with them?
Yeah.
And their data that you also kind of can feed to them, or how does that work?
Yeah. So that is the easiest part. So if they are interested in specific data, we can provide for sure. What the portfolio benefits most of, I would say, or that is the experience of the last years, is as we are dedicated to specific areas, a lot of investors have a strong background in this area. And we have also a set of venture partners, they are all former executives of the industry, or they are former serial entrepreneurs or whatever. So, and they are not paid. Like, you sometimes see these venture partners, which are kind of consultants. We never did that. for us, it is like all about investors, and everybody has skin in the game, and everybody believes in our story and in our investment thesis. And the great value, I think, for them is like we have a quite high level of interaction between the LPs and also between the portfolio companies and the LPs. And the team, by the way, due to simple facts. For instance, if I'm making an investment decision and I want to challenge some of the technology specific areas or pieces or whatever, or thesis of an investment or of a product pitch, I call up one of my LPs, I call up one of my venture partners who is expert in this area, doing that for 20 years, and I can challenge that. And the same is directly with the portfolio companies. We have some investors who decided to join the board of our portfolio companies just simply because they like it and just simply because they know they can add value to them. This is something a portfolio company can never pay for. It's nothing. These people are not being paid for like 3 hours consulting or something. It's just like wanting to make sure that these companies grow and offers them sparring and offers them consult or interaction or whatever you want to. So this is something that creates such a huge value to the portfolio, what I always hear from them. And we drive that. We try to really make sure that there is a level of interaction. You don't have to be active if you are invested in our fund. It's not a basic requirement, but we see that like 80% of the companies really want to. They really want to interact and they want to know what's happening on the market and they want to learn about new technologies. And for the portfolio company, that's the greatest value because then you have sometimes test flights somewhere, between a portfolio company and an LP, or he's getting to be a client because he wouldn't have seen the product otherwise, because he just know about it because it's part of our portfolio, for instance. I think that is the best value you can provide. And that works because we have a defined ecosystem where we are in, I would say.
I mean, look, that's again where, the industry, or a bit more broadly, the topical focus starts to generate network effects in time, right? So, that network of experts, of investors, of affiliates, of ultimately then just expertise that, gets hardwired into your organization and into your network, and then making that accessible to portfolio companies definitely is a huge benefit if you compare that to, maybe agnostic VCs who are so broad that becomes extremely difficult. And ultimately then it's, back to the numbers game. So I think adding that extra level of insight and support is definitely an advantage. Or then there's the, kind of active investor approach, right? Where maybe they're agnostic in terms of industry, but they say, look, we want to get in, we want to, bring in certain, maybe a bit more generic skills. How do you see that? Is that something you do? Or is that something where you say, well, no, look, I mean, at the end, these companies need to kind of fend for themselves. Also maybe intros to customers. Is that something you do? Talk a little bit about how actively engaged you then really are.
Yeah, that's always quite of a tricky part, to be fair. Also for us, it is challenging on a daily basis because what you should not do is you are not the manager of the company, and you should not do micromanagement, and you should not believe that you know how to better run the company than the founders themselves. That doesn't make sense. So that is something we really, really try to avoid hard. That is why we need to focus strongly on the team when we invest, to make sure, this is a team that is able to, where we believe in, to go for the next 2 years or whatever. You can always extend teams, but it is not our job to run a company. I always say that, and I see that sometimes different, and I know that other VCs do it different. My personal opinion is it doesn't make sense. What we do, and what we do a lot, is we actually have, I have to lie if I say the exact numbers, but I would say in 80% of our portfolio companies, we have board seats, because we sometimes even win board seat or an allocation in a company that is fully subscribed, because we have this profile of being an expert in this area. They want to have this interaction, and that is what we offer to do. The one thing is the interaction, to make sure to understand if there's a problem, can we help by just using our network, by using our LPs, by using our knowledge, by whatever. That's one thing. And the second part is we see a lot of failure, to be honest, early stage when it comes to structuring, financing round, cap tables, and we do a lot of support in finding the right way to proceed, to raise the next round, to structure the financial allocation, to look like, is a cap table even investable? Because sometimes you have even young companies and the cap table looks like that you can't invest in it. So, and they're just 1 year or 2 years history. So this is something where we try to do a lot of support, because I don't expect the founders, if they're not serial entrepreneurs, to be able to, understand the market, the product, being expert in finance, in fundraising, in whatever. So this is something where we help and where we support, and also just as a door opener or something. And if there is a conflict somewhere, somehow, of course we trying to solve that. Of course we trying to support that. But I'm not the manager of the company, and you wouldn't be even able to scale it, even if you decide to do that, then you spend like half day on one company. That's not working. So I need 50 people to just manage then the portfolio. So that's not working. But it is difficult, to be totally fair. It is always difficult to make sure when to step back, and say like, this is not my area. And even if I have an opinion, or even if I would do it differently, and this is something where I definitely have to step in or to support.
Yeah.
So
thin line.
I would lie if I would say it's always easy on.
Thin line between giving the right kind of advice and recommendation, and then suddenly becoming overbearing and micromanaging.
Yeah.
And look, I definitely get that, giving support when it comes to, structuring the cap table, going into another fundraising round. I mean, that's obviously where a lot of startups just simply have no experience, because they're coming at it from a different angle, right? And in that sense, how early do you start to talk about like an exit plan or exit scenario? Is that something you try to build awareness for early on? What's your
you should. I mean, I've seen that is just why I'm saying it from experience. You should, because I mean there are two different theses on that. Some people say whatever product you do, if it is like developing great, if it is a great product, you don't have to worry about the exit. That's one thesis. I know that's a bold statement, and that's what you hear and see often. But then the reality kicks in. And the reality is sometimes you recognize that you have founders, fair enough, who are probably saying like, well, I want to exit in 2 years, or I don't even want to exit at all, or I want maybe to exit in 8 years, or whatever reason, or I don't want to stay in the company after the company was sold. I will never stay another year or something like that. So there's a lot of coming up on the discussion of these exit process, and no one is talking about early on. So for me, I always say we need to make clear and sure what is our agenda. And if it does not meet to the agenda of the founders, which is totally fair, but then there is no fit. I can't convince these guys. I learned that they can't convince me. So that is like, I totally respect that. If a founder says, I don't want to, it is his company, fair enough, but it does not fit then, to my agenda. So for me, it is important to understand that there is an exit route for that, and also to make them, if they are not experienced entrepreneurs, to make them understand what that means sometimes, and that's not always like the easy way out, and for none of us, neither the investor nor the founder. So to have this common understanding. And also sometimes if you see companies starting out with crazy valuations, when you say like, that you might probably be able to raise now on that crazy valuation because it's a huge trend topic, for instance, something, but look where you have to end up, and then look what your exit market would look like if you're not a super, super, super high performer. This is always something I think there's not enough time spent on this discussion, but it makes sense to have it, definitely.
Yeah, look, I think in the last 3 years, the industry got pretty grounded again, which I think leads to those, I think, healthier discussions, and definitely having at least a certain exit scenario, working your way back from there. That's kind of part of the fundamentals, and you in your position, of course, have a fiduciary responsibility towards your LPs, right? I mean, obviously, you have to make sure that the
Yeah.
fund also brings returns. Maybe talking about that point. So you're on your second fund right now. How big was your first fund?
So the first fund was a 50 million fund. It was started back in 2018. It was back then like the first prop tech fund in DACH region.
Yeah.
The second fund will target at like 75 or something. And it is open till June for investors, end of June. We still are fully investing. We have 8 investments so far. So it is fully operational. And yeah.
Okay, exciting. So anyone listening, you have until June in case you're interested to get in touch with.
Yeah, happy to. Definitely. Yeah. Sure.
Maybe at that point when we talk about investing, and you look back on a long career, with, I'm sure, many highlights and many lowlights as it is, but what was one of the most exciting moments in your career of investing?
I mean, like, it is not super, it's not the biggest story, but for me, it was when we launched the second fund, because the first fund you see quite often.
Yeah.
But then to be able to do the second fund and did in the first closing, we did 3/3 of the target volume already in the first closing. So that was for me, and seeing like so many from the first fund joining the second fund,
Yeah.
that was for me something I really liked. And just a rather fond memory I had was, it's also not super exciting, but it's something where I remember and where I sometimes think that's why I do all that, because I like it, is I had once, after a really complex and huge transaction, I had a call from the founder in the night somewhere, like I don't know what time it was, and he was on my mailbox, and it was after like a 6 or 7 or 8 hour closing. And he was shouting at my mailbox, and he was so excited, and he said so many nice words. Even we had a really tough time. So also between us, like in the full process, there was a lot of tension then coming up after a time, and we'd always try to be like as constructive and positive, not being like emotional and have a, but trying to bring the transaction to a successful end. And then I had this message in the night, I think it was 1 a.m. or something, on my mailbox. And that was so cool, because that showed that, you're not only the one giving money and then everybody is happy when when you're gone or something, but he was like really trying to make you feel that you have really contributed something, except providing money to the success. And I think that is, to be honest, one of my most fun memories.
Well, I mean, look, you potentially can play a very crucial role in a young person or an entrepreneur's life. I mean, that's definitely something that's influential. But the other part, I'm sure second fund. Yes, that means you're not the first and last fund cohort. So you're already in the second fund. But of course, Anja, the proof is in the pudding with the third fund, right?
Yeah, definitely. No doubt about it. We definitely will go for that.
Good. Anja, what advice would you give to your younger self?
Um, to to try to be more open to do new things or try things that are not already on the market. So to be a bit more open is probably the wrong word, but yeah, try a bit more, give a bit more chance than to turn things down early on. That definitely, because now you recognize that I've met so many people, seen so many people who are just, I'm simply doing it, just doing it. And yeah, that was something I would add to my young.
So don't stop being bold.
Yeah,
That's
totally.
great advice to end it on, Anja. It's been a real pleasure. Time has actually flown by. It's been almost 45 minutes now, so I'll let you get back to the many things that you have to take care of. Before then, on a Friday afternoon. Slowly but surely, the weekend comes around. So thank you so much for taking the time.
Thank you so much. Yeah, it was a pleasure. Great.
Okay.
Thank you, Nils.
Let's end it on that. Thank you also to our listeners. So if you haven't already, please follow us wherever you get your podcasts and tune in next time for Impulse, brought to you by Ventures. Thank you, everyone. Over and out.